I'm Lynette Zhang, and welcome to the Lynette Zhang YouTube channel, where we support community and sound money globally. Please help us build this channel by hitting that subscribe button and that bell next to it, and we'll let you know when we're posting our next important video. But today we need to talk about Basel III, because we are now in the end game stage. And what I want you to understand and remember is that always central banks and governments like distance between their policies and how it's implemented. And they use perception management, managing how you perceive things, to help you move forward in a manner that supports their goals and not your goals. This channel is all about educating you so that you can put forth your best interests first. And we are now at endgame. So let's begin. I want to update you on where we are. Now, frankly, Basel III Endgame, these are their words, not mine. That's what they're calling it. And top economist warns of unintended consequences from a banking regulation that will touch every corner of the economy. Now, they started Basel III a while ago, implementing different changes slowly. And that's how they do it. They do it so slow that you don't even notice that anything is happening, and that gives them more control if something doesn't go in their favor. But here's the thing. Everybody always thinks that they want to postpone the inevitable. And, to some degree they do, because they want to get everything in place for it. However, the reality is that they need a large crisis to shift us into their end game, where we are under the control of central banks on a global basis. And much as they want to say, oh, globalization is falling apart, well, in some areas it is. But as far as monetary globalization, I would not say that that's further apart. So we are fast approaching the end game. We've got a lot of things coming together. I'm telling you, I feel like I'm in a Stephen King novel where, they've got this going on here and there's all sorts of things swirling around. And look at everything that's happening in the world with the wars and everything else, right? So is this unintended or is this purely intended? I don't know, but we're going to know in the end, probably. So what's this next move going to impact? Anything to do with financing. And we know there have been a lot of pieces taken out of our financial system over time. Are you prepared for it? I really hope so. Because anything with leverage, which this system is so extremely leveraged, it's very, very vulnerable. And it can stay tight as long as it can. But at some point, something is going to happen, and they will not, or they will choose not to paper over it and cover it. The risks moves from banks to non-banks, and the system will find a new balance. But will it find that balance with your deposits? Who knows, right? Actually, they know. That's why they set up the bail-in. So the risk that move from bail-outable banks to private investors that still have ties to the banks, because the entire global financial system is incestuously intertwined. And it can work until it doesn't. But the whole system is extraordinarily vulnerable. You know what's not vulnerable? I'll show you. It's real simple. This is not vulnerable, but only if you hold it in your hands, because all that other fiat money wealth is held inside of a very, very fragile system. Is your wealth going to survive it? Only if you're holding it outside of the system in something that's been proven for thousands of years. So here we go, ISDA. So this is how the banks take risks with your deposits and really how they feel about the new rules. They feel that it could impact the liquidity and vibrancy of the capital markets, increasing costs and reducing choice for business, because frankly, it's always about the children. But the reality is banks make most of their money used to be from lending, but that's not the way they make most of their money anymore. They make most of their money from trading. And trading requires leverage, right? So here we go. The cost of implementing the Basel III Endgame framework. How will it affect U.S. investments? Implementing the increased capital requirements as laid out in the Basel III Endgame framework would result in a loss of more than $136 billion in available capital, right? We have no idea of the level of leverage in these exotic products that they create, but by some counts, it's at least 1,000 to 1. That means debt upon debt upon debt upon debt. And here's your equity way down here. So if they need to hold more capital so they can't use your deposits to gamble with, well, then it hurts their bottom line. And they always talk about it. What? Higher bank capital rules will hurt small businesses and middle-class borrowers the most. But where do those companies, those small companies and middle-class borrowers, have we not been witnessing the demolition of the middle class? Yes, we have. So, it's just garbage. They want to continue to be able to trade. And this is where the bail-in comes. But, it's really concentrated in just a few of the large banks. These are total bank assets by categories, and this is the large banks, which dwarfs all of the other banking sectors and have been consolidating. So as banks implode, where do they go? They go mostly to the larger lenders, right? And they absorb them. And that is a huge problem because large banks are the ones that are systemically important, right? So they're too big to fail. You and I, quite honestly, we are just about the right size to fail, but not if you're protecting your wealth. Proper diversification isn't intangible to intangible. So stocks or bonds or any of that stuff, it is intangibles to hard assets and sound money, period. Because nobody really knows the true value at risk in all of these derivatives, in all of these trading products. And we've gotten to the point, which I've shown you over and over and over again, as Wall Street has absorbed the assets of Main Street, hard assets, houses, right? Was that ever intended to be a short-term play? No, it was not. It was intended to be passed down from generation to generation. But now it's traded, real estate is traded very quickly. So what they're talking about here is implementing this will suck the liquidity out of the markets. And also going back years, right? They want this to happen slowly so that you have no idea how much risk you are taking. And there is definitely a risk on trade. But at the end of the day, there's virtually no purchasing power left inside of the currency. And so this whole house of cards must and will collapse. But more and more people are noticing what's happening. They're feeling uncomfortable about it. You might be feeling uncomfortable about it. And your family and your friends that don't know what's really happening because they're blinded by nominal confusion and the misdirection of those that are in power, of those 1%. But I think this is really interesting as well, because this is just average daily trading volumes. Look, there is a finite amount of this, and I'm talking about physical gold and also physical silver. There's a finite amount. Anything that's physical, finite amount. There is an unlimited amount in leveraged Wall Street products. So what you're looking at here is spot gold, right? And where is that? Oops, sorry about that. That's spot gold, which is right here. And I guess I didn't put in the animation. I'm sorry about that. But spot gold, which is trading as much as the 1 to 3 year treasuries, and as well as the euro sterling trade. These are currencies, right? These are currency trades. And I want to point one other thing, or a couple other things out. These are T-bills, so very short term, and we know how things work in the bond market. Interest rates up, principal values down. But these are bills, so they're very short term, and there's the S&P 500. It's third to those two other fiat money assets, but they could definitely use it to control the price. This, at the end of the day, is what's going to save you, because this holds your purchasing power intact over time. They can manipulate the price however they want, but you need to know that the end game is near, whether it's from Basel III, which is highly likely, or guess what? We haven't finished with the LIBOR SOFR transition, which also impacted interest rates, right? Because they could never make the two match. And so people will say, well, see, nothing happened. We don't know that. We don't know that because this is such an opaque market. And what I'm trying to do is show you the truth so that you can make choices that put your best interest first. You need something that is highly liquid and a flight to safety asset, and this is gold, and secondarily silver, because silver straddles both of the areas, whether it's manufacturing or it's monetary. But gold is the primary currency metal. It's what they use to reset the currency against when all confidence is lost. Where do you want to have your wealth? For me, I'm all in. You do what you're comfortable with, but here are the facts. Follow the links. Go there. You'll find the links below in the description, but go there and see for yourself. So if you like this, please give us a thumbs up. Leave us a comment. These are things that help the algorithms and help us grow this channel. Plus sharing. Share, share, share. I'm trying to do different lanes so that maybe you can get your friends and family to sit down for 5 minutes. Maybe you can't. Maybe it can open their eyes. Maybe it won't. But at least you try. And I know how frustrating that is. But you've got to be committed to this process. I am committed to this process. And I am committed to you. So I appreciate everybody out there. I mean, you guys are so kind. And I want you to know how important you are to me and how much I appreciate your efforts. So if you have any questions, we're going to be starting our podcast here shortly so that I'm going to answer as many of your questions as I possibly can. So send them to questions@lynetteszang.com, because quite honestly, together, we can make a difference in this world, a very positive difference. And that's what I'm hoping for. That's what I'm working for. And until next we meet, please be safe out there. Bye-bye.